Yo, how's it going on, YouTube fam? Andre Money back here at it again. Just before we get started, go ahead and smash that like button, turn on those post notifications on, and don't forget to click the link in the description so we could join my live sessions and trade live with me and chat with all my Pitts Profit Club students and take all these fire trades that we were taking every single day. Actually, this one was one of them, which is Euro AUD. I want to go ahead and explain what we did on Euro AUD and why we got in for that buy position, which is that long. So let's just go ahead and do a quick breakdown on this, okay? So we just go real quick on the weekly time frame here. So you all want to make sure that you look at bigger time frames such as the weekly, daily, and 4-hour and bigger time frames, not just the 1 hour, 15-minute. Reason why is because you have more information, you have more data of the market, what's going on in a bigger time frame perspective, right? So we look here on this daily, on this weekly time frame. We could see how in the weekly time frame, just as explained on prior videos, our accumulation of price candle, right? So we have this weekly accumulation of price candle that's been respected multiple times right in this area in the past over here. So we have this weekly accumulation of price candle. We see respect one time here, bounces to the upside 2 times, and currently for the 3rd time, which is where we got in for that buy position, cashing in that long position, coming all the way back up, which is my last take profit area up in this region. Why do we have it all the way up there? Because we have this weekly accumulation of price candle, this bullish accumulation of price candle. On top of that, we also have the weekly imbalance, which is all this right here. This is our weekly imbalance. Now, what is a weekly imbalance or an imbalance in general? An imbalance area is an area that reacts like an empty gap in the market that tends to be fulfilled or filled back in, which price is currently doing at this exact moment. We are currently filling in that area. So I'm expecting for market the next couple of weeks or next couple of days to keep on rising to the upside until we hit the last take profit that we do have of a total amount of around 486 pips in total as in the last take profit, right? Our first take profit already did hit. I'm already going ahead and explain on lower time frame, just like the daily time frame. You want to go to lower time frame. So on the daily time frame, we could actually see how market over here where we have that weekly imbalance and that weekly accumulation of price candle, which is this candle right here. And we also have this daily imbalance area that needs to be filled in as well, which is all this. So therefore, we have another confirmation of an imbalance of a lower time frame that we should still be keep on rising to the upside. So we go down to the 4-hour. Here on the 4-hour, we could actually start seeing more confirmations on why the market should start rising, which we had our buy limit down here. This is our entry price, right? So when market was down here, we did have this relatively equal highs that market has to clear out. Why? Because those are areas where retail traders are gaining for selling positions. Why? Because they see double top, double bottom for such other false information. So this right here is where retail traders have their stop losses that have to be seeked out. Before that happens, when market had to come back down into a 4-hour accumulation price candle that we had right here, right? So our ideal entry would have been right on this bullish candle here. Now, did I get in right there? No, I didn't, because I wasn't really looking at the market around that time, but there's no worries. Why isn't there any worries to be happening? Because in lower time frames, that right there is what we call a spring to the upside. So every time that we have a spring, it's when market starts retracing back down and test once more into the accumulation of price candle that we leave behind, which it did, such as the 15-minute or 1-hour time frame. So right here, we could see how in this 4-hour time frame respected very well, this accumulation of price candle filling in as well, it's 4-hour imbalance area that we have right here. Just like I said, every time that we have an imbalance, market, no matter what, it's going to tend to recap or retrace that area to just fulfill the price, because that's an empty gap that we have in the market. But you can't really know if it's gap. That's what we call an imbalance, because just a hard push momentum to the upside or a hard push momentum to the downside, just like we had right here. So what happened? Market comes down, retraces, fills in price right here, which is the imbalance area, testing into our accumulation of price candle. On top of that, we did also have our fair retracement on the 4-hour time frame from the start to another impulse. We could see how market came into what? Our 7.9 discount area. 7.9 discount area is a very important level for us to start getting in for buying positions. So those are areas where we could start getting in for buys. So right there's where I got in my buy limit, came into the 1 hour. And the 1-hour time frame, we could start seeing how that spring happened. So we left that 1-hour imbalance, that 1 new hour imbalance. When I had put that buy limit, market was around this price, around this candle. It still wasn't down here. It still did not activate my buy, but it did, which I'm going to go ahead and explain why I placed it right there on the lower time frame. I was just waiting for market to retrace and clear out the imbalance that we have right here, which market did. On top of that, I did go to the 15-minute time frame that we look over here. we look at the 15-minute time frame, I was just waiting for my market to come and retrace into that 15-minute accumulation price candle that we had right there, which is my last bearish candle before this push up. So I placed my buy limit right in that area, right on the opening. I did go within some drawdown. We had around, I'll say like how many pips was that? Like 12 pips drawdown. My stop loss in total, it was around 20 pips, if I'm not incorrect. Let me go ahead and check. So right here, we did have a stop loss of 28 pips. The reason I had my stop loss there is because we did see that we still had some liquidity that could have been cleared out in a lower time frame, like the 15-minute time frame here, which we left this liquidity right here. So that's why I just put it a bit lower. I usually tend to put my stop loss 10 to 15 pips below or above accumulation price candle, depending if we're going to the upside or the downside. Which right here in this case, if I would have put a 10 pips, my stop loss would have been right on that wick. But since I did see that wick that had a potential movement to be cleared out, I did put below, which was around 23 pips below that accumulation price candle, making our stop loss a total of 28 pips that we have right there. Now, my first take profit, I did have my first take profit on those relatively equal highs that we had seen before on the forward time frame, which was right here around going and averaging around, I think it was 103 pips. Yeah, like around 105, 103 pips for the first TP. And such as the second take profit, well, that's our last take profit that we have on that weekly accumulation price candle here, right? So we have that weekly accumulation price candle that we need to see market continue rising to the upside and testing that area to hit our last take profit. Now, I'm going to just go ahead and explain this quick rally down. This quick rally down, we had it because at some given point, we had to come back down and test into that breaker, which that breaker is this equal high that we had here because market broke structure once we broke those equal highs. So market's going to tend to retrace back down into that area, into that zone, and tend to tap into the commission price candle once again, which we had right here. We came and tested it right into this commission price candle, tested it, and started spiking once more to the upside. So right now, market should still be bullish for the next couple of days or even for the next few weeks to continue on rising and hitting our last take profit, which would be around that weekly commission price candle that we have over here. Boom. There we have it, that we can make our price candle. Once we reach that area, that's when we can start looking in for some selling positions, some shorting positions for short term. Because overall, I still see Euro AUD being very, very, very bullish to potentially come in even clear out the equal highs that we have up here in the weekly time frame. So Euro AUD should have a very bullish year for the rest of this year. We could catch some retracements coming down as well on lower time frames for a couple pips, maybe 100 pips, 200 pips retracements coming back down. But overall, Euro AUD should be very, very bullish. So with that being said, that concludes the video today, going over Euro AUD, why I got in for that buy position. If you guys have any questions, just please go ahead and comment below. And also, if you guys do want to join my live trading sessions when I go live every single day with my students on PPC, just click the link in the description, and I'll see you guys in the next live session. With that being said, everybody have a great night and happy trading to y'all.